Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1223A, and today's date is March 8th, 2017, and the title of the episode is, The Central Bank is Ready and Prepared to Trigger the Economic Crisis. Now, before I get started, I just want to make an announcement. I uploaded an interview with Jim Willey. It is on the X22 Report Spotlight YouTube channel. So all you have to do is go to YouTube, type in X22 Report Spotlight. It will bring you to the video. It will bring you to the channel. Or you can come over to the x22report.com site, scroll down a little bit, look over to the right-hand side. You'll see the video there. Or go to newssentinel.com. Same thing. Scroll down, look over to your right-hand side. You'll see the video there. We talk about a lot of things. One of them is how the U.S. is going to be forced to take a domestic dollar, which is going to be devalued. And that's when he says the crisis is going to begin. So if you have some time, go on over to either the x22report.com website or go to the Spotlight channel and listen to what he has to say. Let's get into the economic collapse financial news. Now we're going to head out to Greece because what we are seeing out there is a complete and utter disaster. I know the central bankers, even the Greek government, they were saying that things aren't improving there. It looks like they're out of the woods. Well, nothing could be further from the truth. And what we're seeing right now is a complete breakdown of the Greek system. And it looks like they cannot make this deal happen where they can take on a lot more debt, which is something they really don't need. But we see Christine Lagarde from the IMF, which is the International Monetary Fund, she is the managing director, said that Greece must implement essential reforms. At the same time, urging Europe to offer the country substantial debt relief because the central bankers realize if a country has too much debt, they go under. They collapse. They don't want this to happen because the rest of the countries will look at this and say, look what the central bankers just did. They just collapsed a country. They told us they were improving. But as they kept on putting on more and more debt, look what just happened. They can't let this happen. Their entire system works on keeping countries in limbo. Enough debt to make everyone believe they are helping. At the same time, they're stealing their assets. This is how central banks work. This is why they want not a full debt relief, a partial, just to give Greece some breathing room. Will it help? Absolutely not. Now, Yanis Varoufakis is out there, and he's saying that austerity is a cover story for conducting class warfare against the poor, which is absolutely true. Austerity does not help. It helps the central bankers. It helps the creditors. It helps keep the country in that limbo state. But that's it. And eventually what happens, as you keep implementing austerity, people get poorer. People find it very difficult to find work. And it gets worse and worse as time goes on. And we are definitely seeing this in Greece. Because what we're seeing right now is rioting in Greece once again. We see police gone up against farmers protesting tax and pension reforms in Athens. There were about 1,000 people trying to force their way into the agricultural ministry. And the police were, hitting them with tear gas. The people were throwing bottles, cans, breaking windows because they are very upset. Things are breaking down. And what we're seeing at this point is that the people of Greece, things have not improved at all. I mean, if you listen to the people, one of the individuals said, the state is taking 75% of my income. He said, we all need meds to endure this one. I mean, that is quite a bit. And what we're seeing right now is that, coming from the country's statistical service, Elstat, that after 2 straight quarters of growth, Greece's economy contracted from October to December, marking the worst quarterly performance since the height of the country's debt crisis in the summer of 2015. What they did was they played with numbers. They made it look like the country was improving. But it's impossible. Yes, you can shift numbers here and there, make it look like unemployment's coming down, manipulate the unemployment. We've seen it in the United States. But in the end, it doesn't work. Eventually, it all comes around and the whole thing falls apart. And this is what we're seeing right now. Marine Le Pen is out there saying that if she wins the elections, first, they're going to remove themselves from the EU, just like all the other countries. And she's going to introduce the new franc at a rate of 1-to-1 to the euro. Well, the central bankers are not going to like this. I mean, the deep state, the central bankers, they dislike her now. Well, if she wins and makes that move, well, the next move for the central bank and the deep state will probably target her removal. And you know what I mean by that. We see Mexico right now. They have taken a trade war shot at the United States. I guess they didn't like what Trump was saying. And it looks like they're pushing an agenda. It appears that Mexico right now has taken a preemptive step in the imminent trade dispute by canceling existing sugar export permits to the U.S. in a dispute over the pace of shipments. And this trade flare-up, which is the beginning of trade wars, which actually then leads into war, well, this most likely is going to disrupt supplies. And we could see maybe shortage of sugar. We see that ADP came out with their numbers, and they're coming out saying that jobs have just surged since the election. Things look fantastic. And once again, they are lockstep with the BLS. They pretty much are very close to whatever the BLS says, and we know that the BLS, well, they don't count those individuals that have fallen off, and at this point we can see that ADP, most likely, their numbers are manipulated just like the BLS because they're very, very close and similar when you look at the graphs over time. Now, Caterpillar, remember we had the FDIC, the IRS investigating Caterpillar? Well, it looks like the mystery is solved. The raid on the office by U.S. government agencies, well, it looks like it involved tax and accounting manipulation or accounting fraud. Now, this is coming from the Tuck School of Business at Dartmouth. And Leslie A. Robinson, an accountant professor at the Tuck School of Business, and the author of this report that came out, said, "I believe the company's noncompliance with these rules was deliberate and primarily with the intention of maintaining the higher share price. These actions were fraudulent rather than negligent." And she was looking at Caterpillar, and she's saying that, for example, a correspondence between the company and the Securities Exchange Commission in which Caterpillar said it had $2.5 billion of income eligible to be brought into the United States tax-free. Ms. Robinson wrote that her research showed that the company did not have anywhere near the sum still available to be brought in tax-free. And this is one example that she is citing. Now remember, Caterpillar, they're in trouble. Sales have been declining for 25 months. Factories are closing. They're laying off people. And the global market, well, it's a disaster right now. So they might have been doing some tricky accounting to make their entire company look a lot better than it was to keep stock prices up. We see that U.S. productivity growth slowed dramatically in the fourth quarter. Now we're starting to see things start to come down after the election in November. And it looks like we had that dead cat bounce, and now everything's starting to normalize because Q4 was a disappointment as growth slowed to about 1.3%, below the 1.5% expectation. And it looks like it's going back to where it was when President Obama was in office. And most likely we're going to see it drop even further. And now we see, coming out of the Atlanta Fed, where we reported on the GDP being estimated at 1.3%, the Atlanta Fed, well, it just slashed it again. It is now down to 1.2%. And what's very interesting about all of this is the Dow and the SP 500 keep moving up and up and up, and the GDP is going the opposite direction. Now, we've been seeing and hearing a lot of warnings lately. Bank of America Citibank, JP Morgan, David Stockman, Cliff High, Harry Dent, Mark Faber, and it goes on and on and on and on. Well, we have another warning. RBC's macro strategist Mark Orsley, who in his latest note writes that something has dramatically and suddenly changed in the market in recent days. And when they look at their macro model, well, it shows that something is going on here. And what he's saying is that the good folks at QI, our quant macro model provider, flagged to me that their R2 on SPX has been falling quite quickly. This means their model, which incorporates hundreds of different factors, is now unable to explain why the S&Ps are moving. Previously, the main driver of S&Ps were well explained by forward earning estimates, inflation growth, credit spreads, energy prices, and the real rates, but that is no longer the case. That means that the S&Ps are going through a regime change, and typically when the R2 falls this way, it is a red flag and caution is warranted. And this is just another indicator to add to all the others. Now, it's starting to look like 1937 all over again. Because what we're seeing right now is that GDP has now collapsed from 3.4% early February to 1.2%, and this is the estimate that the Atlanta Fed was given. It will be revised even lower based on the awful deficit numbers. Inflation is soaring. The Fed tracks four inflation metrics. They are core CPI, core PCE, trimmed mean CPI, and the Cleveland median CPI. And roughly all four are now at or above the Fed's so-called target of 2%. We see inflation moving up. We also see it in Germany and Spain and other countries. Now, weak economic growth and soaring inflation, there's a word for that. It's called stagflation. Now, the Fed is going to do and repeat what they did in 1937. They're going to hike rates into a weak economy. Now, like then, the CPI is soaring while GDP growth is flatlined. Now, what was the outcome in 1937? Well, the entire system plunged into another recession, actually a depression, and stocks nearly halved at that point. It was a complete disaster. And we're seeing the same thing once again. Now, Cudmore is out there, and he is saying that the correction, well, it's already started. The VIX, emerging markets, copper, hard macro data, and now high-yield credit are all breaking down at the same time. Now, this is just another indicator to be added to everything. Now, what's very interesting about all this, we just talked about the Fed hiking the interest rate into an economy that's failing, which repeats what happened back in 1937. And the Fed, well, they're supposed to be a neutral, independent entity. However, that myth went out the window. Now, Yellen seems to be even more committed to defining the Fed as nothing more than a leftist establishment mechanism. Because let's look back in October, when it looked like Hillary Clinton would win the 2016 presidential election. Yellen commented that she was considering letting the economy run hot, meaning allowing inflation to rise without implementing additional rate hikes. Now, Trump won the election, and Yellen announced she wanted to hike rates in December with 3 more additional hikes in 2017, completely opposite of what she said when Hillary looked like she was going to win. Now, the third quarter of 2016 growth was supposedly 3.5%. If that had been true, then yes, the Fed should have considered hiking. However, since that time, GDP growth has collapsed. Fourth quarter 16 growth came in at 1.9%. The first quarter of 2017, it's looking like it's going to be at 1.2%. They thought it was going to be 3%, but it's not even close. And Yellen is still pushing a rate hike. So back in October, when the economy was supposedly growing at an annualized rate of 3.5%, Yellen wanted to let the economy run hot. And now the economy is growing at a 2% rate, and it's forecasted that it's going to be going down to 1.2%. And when you look at everything and what she is doing and how it compares to 1937, it looks like she's getting ready to trigger the economic collapse. She's actually doing it. Now, of course, they're not going to tell you this is what they're doing. It's not going to happen as soon as she does it. But as we move throughout the year, this is the trigger. They're preparing to bring down the economy. Now, Russia and China, they understand that the dollar dominance, well, it's coming to an end. They realize this. And a London-based bullion broker, Sharps Pixley, formerly owned by Deutsche Bank, has suggested that Russia's gold reserves could overtake China's by the end of this year. And when we're looking at all of this, we can see that Russia and China, well, they see gold as an important element in the global financial system. China has reportedly called for gold to be included in the basket of currencies which makes up the IMF's SDRs. Now, some will argue that gold, in effect, should be treated as a currency. Others will disagree. Certainly, Russia's President Putin is a gold believer. He continually accumulates gold. The Chinese hierarchy is perhaps a little more circumspect in its open support for gold. But both nations are keen to see the US dollar dominance of the world come to an end, especially in respect to oil and gas. And what we're seeing right now is that they are preparing for this. They are using gold, or they will be using gold, to chip away at the US dollar dominance. It is now being discussed openly, even in London. And when we listen to Jim Willey, when he's saying that the domestic dollar is going to be forced on the US and it's going to be devalued, we can see where all this is coming from. So if you haven't prepared, get prepared, because it looks like everything is coming together now. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.